Welcome everybody to our video series. I'm Jason Barlow with Sell for 1%. I'm here with the guys doing a roundtable discussion. We'll go around and introduce everybody real quick. We'll start with Mike.
Hey guys, Mike Hopper, buyer's agent, working with Sell for 1%.
Hello everybody, it's Jamie Barlow, buyer's agent as well as Mike here, and I am with Sell for 1% as well.
Howdy do. I'm Dave Barlow, known as the old man and the much handsomer man of the group.
Yeah.
Good morning. I'm Mike Reeve. I'm with First Financial Bank. I'm a mortgage lender.
I'm Jason Barlow. I'm a realtor, widely known as the best looking realtor in the entire city.
I thought I'd try to beat you to that today.
As we were talking, one of the topics that came up was a question we get from a lot of first-time buyers is how much money do we need down? And as we talked, a lot of buyers call us thinking they need 20% down. Some know, 10%, some know about FHA, but really there's a lot of confusion out there. And as we kicked it around the circle, it turned out that Mike and Jamie had both done deals with Mike Reeve at First Financial. And Mike's example, he had a buyer buy a home, $230,000 home, and they paid $500. And these are real deals that we're closing. And so we thought, hey, this would be something good to share with people that you may not have heard before. So with that, I'll turn it over to Mike and let him share his experience he had with Mike Reeve.
Yeah, I've actually had the opportunity to work with Mike and close one of the loans we're going to discuss today. I was helping a family of 6 look for a home in Hilliard. They were currently approved for an FHA and with an OFA down payment assistance program, which I'm sure Mike will touch on today, because they didn't have the funds to, pay a normal or standard down payment out of pocket. Problem is in Hilliard, to find a good home, you need, roughly $200,000, $225,000 to get a starter home. With the loan that they currently had, they just didn't have the money for that high of a payment. So luckily for us, Mike proposed a loan called the Community Builder Loan. And it was actually able to boost their buying power by lowering their interest rate and eliminating what's called private mortgage insurance from their monthly payment. Long story short, they found the perfect home in Hilliard. And on top of it, they, like Jason had mentioned, they only brought $500 to closing. So I'm actually really excited about this video today and to learn more about the products that Mike has.
Yes, sir. And similarly, I had a buyer pre-approved with an FHA loan and flipped over to Michael Reeve and his community builder project like Mike was just talking about. And their big concern when they first came to me and we first started looking was exactly coming out of pocket, down payment, and all the fees at closing they'd have to pay. And again, the house was just under $170,000 and under $523 to close. And they were unbelievably thrilled, family of 5, and very good experience. So working with Michael Reeve was a smooth process as well.
Well, and as you guys are talking about this, normally when someone buys a home, there's a down payment and then there's closing costs. And so closing costs typically are, around $2,000, $2,500 on top of your down payment. So when Mike says that people paid $500, that's total. And so it's pretty crazy. Mike Reeve, why don't you tell us about some of these things? The one they both have talked about is a community builder. I don't know if you want to start there or where you want to start, but why don't you,
Sure.
get everybody?
In general, there's 2 loans that don't need any down payment, and that's a VA loan and that's a USDA loan. So if you don't qualify for either of those, you've got, conventional and FHA options. Conventional is a minimum of 3% down, and FHA is 3.5% down. What we've got is about 6 different programs with what's called down payment assistance. And that down payment assistance ranges from 3 to 5%. It comes in a lot of different flavors. The conventional down payment distance has an income cap typically of around 62,000, and that's for Franklin and surrounding counties, and that's borrower income, not household income. So the community builder loan is a portfolio loan that our bank offers, and it's 3% down and comes with a 3% grant. So basically, it's we're going to give you a grant to cover the down payment. We also reduce closing costs. To go on that loan, there's no lender charge, so the closing costs are going to be under $2,000. Great loan. Typically, I mean, the rate's going to be lower than a lot of other options with down payment assistance, and then the loan has no private mortgage insurance, so that can lower the payment even more.
So on the, let me ask just real quick, Mike, on this community builder, when you say a 3% grant, that's money that the bank is giving the buyer to help with their down payment or going towards closing costs. Is that grant then forgivable, or is it rolled into the loan?
On that product, that grant is forgiven over 5 years, and it's prorated monthly. So
basically, if they live in the house for 5 years, the grant goes away altogether.
Correct. Yep.
Okay, that's cool.
There's another product out there that the grant is forgiven over 7 years, and it's not prorated. So if you're not there the full 7 years, you have to pay it back. That's an advantage of the community builders. It's prorated, and it's a shorter time period.
Yeah, I haven't heard of the proration before.
And so that's one of the loans that Mike and Jamie use with their buyer to be able to get into the house, a $230,000 house with $520 down.
Correct. And then you could also ask for a seller paid what closing costs to get the funds to close number down.
Well, I normally represent sellers, so I do a lot of listings, and we hate to see that.
Yes. Depends on the market. Yes.
Yeah. That cuts down the seller's proceeds.
Yep. We have another program called Dream Builder, and it's also a conventional loan. It's 30-year fixed. There's no mortgage insurance. And the Dream Builder is also 3% down, and it's not a grant, but we give a 5% community second mortgage, so that 5% can cover the down payment and closing costs. Now, the Dream Builder, that 5% is a second mortgage at 0.01%. So that would be the third column. So on a $200,000 purchase in that third column, the second mortgage is $6,000, or $10,000. At 0.01%, the payment is $32 a month for the second mortgage.
Wow.
It's basically 0% for 30 years. I mean, it's 0.01%, almost zero. So that's called a community second mortgage. Dream Builder's got the same income limit as community builder, but what Dream Builder is, credit score driven, where community builder's not. So community builder, everybody gets the same rate. Dream Builder, the higher your credit score, the lower the rate. But yeah.
And so one of the things that we have seen is each bank is different on their credit scores. And as we look at the bottom of this page that Jay, you were just showing, it shows on these two that your minimum credit score is going to be 640.
Correct. Yep. And credit score minimums are constantly changing. Sometimes they go up and down, but right now, I mean, products that were available at a 600 or a 620, they've raised them up to at least a 640 right now. So things are always changing.
Right. All right.
One thing I wanted to circle back to before we move on is we're talking about from the listing perspective. I think it's important that as buyers, the one major advantage that Jamie and Mike's buyers had in this market right now, if you haven't been out looking yet, there's more than one buyer, for every house when it's a good deal. There's not much for sale. There's lots of buyers trying to buy, and so it's a competitive market. If you're going up against an FHA buyer that has more difficult appraisal guidelines than a conventional buyer, that's an advantage for your client. These are conventional programs. Are they? These are conventional, Mike?
Yes. Yep. All of these are conventional.
As an agent, we can position you as a strong buyer, even if, credit is 640, the other agent's just going to see, and the seller's going to see conventional and first financial pre-approval. I mean, you get in a position to win. So these are awesome.
I think the other thing too, also with Mike in particular, he mentioned a word that we don't hear much of anymore, called portfolio loan. And so that basically just means that you, Mike, and your bank are the ones offering this product.
Yep. We offer the product, we write the rules, and we keep the loan.
Gotcha.
Right.
And so for just when you compare to like an FHA loan, how is your debt to income ratio on these particular products as well?
FHA will go up to 49.9 or 50%, sometimes even 55. I mean, most of these programs go up to 43%, but it's almost because there's no mortgage insurance and typically a lower rate, it usually doesn't affect how much house they can qualify for because it's a lower payment.
Yeah.
I mean, if you pull up the first slide, this is, a $200,000 purchase with a 3% down. If you compare, column 1, the payment's $1,572. Column 3, the payment's $1,367. That's $205 less a month in payment and $4,000 less funds to close on the Dream Builder. So even though it's a lower debt to income, the payments, 15% less.
Yep.
With $4,000 less to close.
You can eat up that difference.
Yep.
Mike, I just wanted you to touch briefly on the difference in geographically between Community Builder and Dream Builder, and kind of why you have kind of pushed Jamie and myself to get clients to move towards the Dream Builder loan since it's a little bit better product. Can you elaborate on that a little?
Yeah, I mean, typically between those two products, they work anywhere. It does not have to be a low to moderate area.
Okay.
Those particular products have an income cap of 62 to 320. The Champ loan is another portfolio loan that has an income cap unless it's in a low to moderate area, and then there's no income cap.
Oh, okay.
But that particular loan does not have the down payment assistance. It's 3% down, but it's a conventional loan with no mortgage insurance.
Okay.
So can you talk a little bit about the OFA and the Heroes and the VA loans?
Yeah, so OFA is a product that we offer, and typically now that they've got an income cap on their conventional program, we typically only use it for somebody that needs down payment assistance, where their income is above that $62,000, and then we would look at an OFA FHA loan. The income caps could go up to $109,000 a year. So that would be somebody with higher income that needs down payment assistance. The OFA grant is up to 5%. It can cover closing costs with down payment and prepaid items. And that grant is forgiven over 7 years. Ohio Heroes, you can qualify by employment, healthcare workers, nurses, firefighters, police officers, things like that. It offers a reduced interest rate from the normal rate. And then VA loans, if you're a veteran, 100% loan. Pretty much nothing beats a VA loan, but you have to have served and qualify for that entitlement. So it's a good benefit to veterans.
And then if you want to live out in the boonies, USDA.
Yep. I said there's nothing better than a VA loan. The second best loan is the USDA loan, and
that's why I thought of it.
Yeah, it's no money down. I think there's some small pockets. I mean, it's based on property location, and there's also some income caps. They're pretty high. There's a few pockets in Franklin County, but almost nothing in Franklin County, but lots, in the counties that surround Franklin County, and most of Ohio by landmass, qualifies for a USDA loan. So it's a 100% financing, no money down, competitive rate. So
that's cool.
Yeah,
but you got to live in the boonies.
County.
There's nothing wrong with that.
I wouldn't mind. Although I don't think my wife will let me since the kids, she wants the neighborhood life. So I don't think I'm getting out of town anytime soon.
The boonies are shrinking as well.
Yes, they are.
Well, I have a quick question. I actually talked to a buyer yesterday on the phone that was a 911 dispatcher. Do you know, Michael, if that would qualify for a hero loan?
I would need to check. I think it might, but typically we would only go to the OFA Heroes program if they needed that FHA, the higher income limit.
Yeah.
Okay.
But I'm 50-50. It would take me, 2 minutes to look it up.
Yeah.
I wish I knew everything off the top of my head.
I think you know plenty.
Yeah.
So these are all loans, Mike, that you guys do there in-house. You have your own underwriting staff and all that as well?
Yep. Well, so my office is in Worthington. I'm a producing manager. I've got about 9 other loan officers. We've got processors, underwriters, and closers all in my office right by the Worthington Mall. So we've got control over the whole process. We do it all right here. We underwrite and fund all these loans. They're not going to Texas or Atlanta to be underwritten right down the hall. And yeah. What else did you ask?
I think there's a great advantage to that because I've had lenders before where I'm calling and checking up on them all the time. And even with doing that, we end up missing a closing date. And I remember with our deal, we worked it out together, calling you a week before. And after our conversation, you just politely said, yeah, we don't miss closing dates. And that was very, very reassuring as an agent that this thing's going to get done and everything's lined up. So,
yep. Yeah. I mean, we're local and we're accountable and we're here to help people and we don't miss closing dates. Yeah. So
So how can people get a hold of you, Mike? And do you have like online where they can apply online, those kinds of things?
We do have an online application. I mean, I always want to talk to somebody
Sure.
first and find out what they're looking for, their goals, their parameters, and then the first thing I do is I have them apply online. We have an online application. It's a smart application. As you're applying, it'll prompt you to upload W-2s and pay stubs, and will notice large deposits, ask you to explain them, and it's a pretty quick and easy. But first thing they need to do is just call me. I'm at 614-682-5252, and we'll have a conversation and we'll talk about home loans.
That's cool. Well, thank you.
Awesome. Yep. Want to give a big thank you to Mike Reeve. Appreciate your time and sharing all this with us. And I hope that people watching learned something. I think all of us probably sitting here did.
Absolutely.
And so, give Mike a call, get pre-approved with them, and get yourself in a position to get the house you want.
Yep.
With no money down.
With no money down.
Yep.
Yeah.
It was nice to work with you, Mike and Jamie.
We'll try and keep the content coming your way, guys. Thanks for joining us. Take care.
Thanks, guys.
Thanks.